Hey, welcome to the Stock Market Starters YouTube channel. Today, we are looking at another day of fundamental investment analysis, and we are looking at Verizon. So let me show you guys what I'm looking at, and we'll kind of run through it. This should be another cool one. So here we've got Verizon pulled up. This is the 1-year daily chart, as we have in the last couple of stocks, right on Ford and KHC here. We are going to look at the technicals, then switch over into the fundamentals and do a analysis on it. So looking here on the yearly chart, since about January, we've been basically going flat within the range of $43 to $39 on the bottom side. So basically just kind of rolling sideways. We're at the top of that now, of that 41.75 range where we've had some drops before, right? Like here, had a drop here, had a drop here. So could be heading down in the near future, but overall we're kind of just going flat on this. Pretty good dividend on this. We can see their earnings have been pretty consistent here. And if we look at, instead of a daily chart, let's go to a weekly chart, look at a 3-year. We can see we've come down quite a bit, right? The high back in here was 55.51 a couple years back in 2022. And, big drop since then here in towards the end of 2023, or rather 2022. Then coming into 2023, we dropped again. Now we've come up, kind of gone flat. And so the question here is, hey, are we going to get some movement up from here, right? We've been going down. Is it time to kind of build some support and then go up after that? That seems possible. So that's kind of what we're looking at in terms of a technical analysis. So if we pop over, we know we've got, Verizon Communications. Verizon, and I don't know what Verizon's actually called. VZ. Let's find out. Verizon Communications Incorporated. So that's cool. Communications Inc. And ticker symbol is VZ. Perfect. So then we can expand that. Move this back a little bit. So perfect. So we are, kind of ready to look at our fundamental analysis. Of course, we've done Ford, we've done KHC. Now we're on to Verizon, and we kind of want to see if we can run this and then see how it compares. So first, we are looking for market cap and EV, right? Looking to see how big the company is, right? What's the company worth overall? Are they big enough? Now, it's Verizon. Pretty much I think everybody knows what Verizon is, at least, right? One of a few major cell providers, among other things. And, so the question here is, all right, what does their fundamentals actually look like? So market cap is first up, and market cap today, intraday, we are seeing 175.015 billion. 175.015 billion. Big valuation. Again, that's based on the current market price of the company. So, if the shares were sold for all the shares outstanding, that's what the company would be worth, basically. Now I want to look at EV, which is, of course, another valuation metric. Now, if you guys have been watching, EV is not in here in this very first one. For EV, you've got to come back down into statistics, and we are seeing as of the 27th, which was yesterday, of course, then the PE, or rather EV, enterprise value, right? That's what we're after here. Is showing even higher at 345.03 billion. 345.03 billion. Big jump. Of course, there's some drastic differences there. Again, EV calculates things like debt, cash on hand, things of that nature. And so, without going really deep into it, what I'm seeing here is, hey, it's a big company. I know Verizon, I don't think they're, going to go away tomorrow, right? It seems like they're not going to go bankrupt immediately, barring any really unforeseen major changes. So that's kind of fine, right? To me, those numbers make sense. So then we're looking at beta, right? How much correlation is there between the overall market and Verizon? So beta 5-year monthly, we're seeing a 0.39. So less correlated than some of these other stocks, right? 0.39. That's a pretty small beta here to be seeing, right? Saying, hey, it's about 40% or 39% correlated to the market. So the market movement attributes to about 40% of the stock movement. Smaller than KHC, which is just over 50%, and certainly smaller than Ford, which is 163%. So, yeah, kind of interesting. Next, we want a PE ratio. PE ratio, trailing 12 months. Perfect. There it is. And we are looking at 15.63. So, right, again, PE ratio, price to earnings, right? So for every dollar of earnings that the company makes, it's saying investors right now are paying about $15.63 for that dollar of earnings. So kind of high, right? Higher than Ford and lower than KHC. So not, I don't know. I mean, not outstandingly high, but definitely higher than we saw with Ford here on our first analysis, and lower than we saw yesterday. So sort of an in between on that front. Next, we want to look at PEG ratio, right? In terms of growth rate, how much are we paying for a dollar of growth into the future? And PEG, of course, is not on here. Again, we got to go back down to our statistics. And PEG ratio yesterday is $1.18. So 1.18, right? So they're saying, on the PEG ratio, you're paying about $1.18 per dollar of expected future return over the next, I believe it's 5 years. Yep, 5 year expected. So PEG ratio a little high. That's a little bit concerning as far as this one goes. I would be curious. I mean, we just looked at the chart on here, right? If we do drop back down into this $39 range, or I mean, even looking at this 50-week moving average, right? EMA. If we drop back into $40, that's $1.50 lower, right? Does that change this PEG ratio? So interesting question, but the PEG ratio right now looking a little high. Next up, we got earnings per share, EPS. Now EPS will be up here on the normal section, and EPS we are showing 2.66. So 2.66. So they're making $2.66 per share outstanding. So higher than we've seen in the past, right? Higher than on KHC and higher than on Ford. So making some good earnings based on those shares there compared to these other stocks. Next, we want to see dividend yield. Dividend yield, of course, again, going to be right here, $2.66, which happens to match the EPS, which is interesting. Yeah, I mean, that is interesting, actually. Huh. Anyway, they're saying, all right, that is a 6.42% yield as of right now, 6.42%. So, right, dividend yield is higher than we've seen on these other two, which makes sense. It's a pretty high dividend they're paying. On the actual chart, we can see, right, they're paying 66 and a half cents per share each quarter on a $41 stock, right? So that's a bit of a higher dividend, which is cool to see. Next, we want to see EBITDA. And EBITDA, if you remember, we have to go to financials, and we're looking at the income statement, right? There's balance sheet cash flow. There's this dividends thing that you have to pay for advanced Yahoo Finance to get access to. But for the moment, we're sticking on the income statement sheet, and we're looking for EBITDA, which is right down here. So EBITDA trailing 12 months, that's perfect. Then we've got this 47.24. And if you recall, these numbers are all in thousands. So we'll equal 1,000 times our number that we got to do. And then we want to comma separate it just for the sake of seeing it more easily. And we are looking at about 40.724 billion, right? So that's perfect. 40.724 billion, right? So very, very high EBITDA, especially, compared to these other stocks that we're looking at. They're making a lot of earnings. So that's, that's kind of interesting to see. They got a lot of money coming in. Of course, Verizon does have the recurring subscription model, right? Where you buy the phone, you pay for the phone over time. You also pay for the service rights. So you pay for that over time. So, a lot of recurring earnings there, which is pretty cool. Next, we want to look at revenues, and we're going 2020 through present. So again, that is on our financials, income statement, and then we're looking at total revenue. So we will just copy these over starting in 2020, and we'll give ourselves a picture of what's been going on with their revenue in the last 5 years. So there's one, there's two. And, I mean, if you're not 100% tracking with this, right, I know I'm going through this one a little bit faster. Go and watch my last couple of videos, right, the Ford and the KHC analyses that, might make this a little bit more clear. Watch the video where I talk about what each of these numbers actually means and how we're going through them and what the point is. I'm going through them a little bit quicker as we go through, right? So I'm not super repetitive, hopefully, for those of you who've seen this, been watching the series, been keeping up with it, but kind of interesting. So quick glance, right? Cursory glance, we can see we're going from 128 to 133, 136, 133, 134. So, that tells me we're going up overall, but there was this year back here in 2022 where revenues were higher, and then we came back down again after that. So, good to know. Of course, we can also actually do our chart, right? We want to look at a chart and graph this beauty. Perfect. So this one is going to be our Verizon, title it Verizon revenue trend. Right. And so this is kind of what I expected out of this, which is, hey, we've been moving up pretty consistently, right? Went up 3 years, dropped a little bit, and then now we're up again slightly from that. So not entirely shocking to see. What that tells me is, hey, revenues are going up, but perhaps have slowed a bit in the past. Again, we talked about it might be worth looking at these comparatively. So we'll, make this chart and see what this might look like. Boom, right? So, right, you can see, I know they're not labeled, but this series 1 is going to be Ford, right? So Ford, highest revenue growth. Series 2 is going to be KHC, which, looks dramatic here, but again, is really pretty flat when you extend it to show the full scale. And then series 3, which is going to be Verizon, and that's this one. So, moving up, but not as significantly, right? It is interesting to see, though, that, with the higher EBITDA, higher, EV, higher market cap, all of this stuff being a little bit higher on Verizon, we still see that the revenues really are about the same, and Ford has even gotten a little bit higher revenues. So kind of interesting to see. As we look comparatively, of course, we will do one of these, once we're done, get our last 2 stocks, or rather last 3, I believe, right? Yeah, we got 3 more, Main, GM, and Home Depot. Once we get our next 3 stocks, we can do something like this where we show them all comparatively and say, okay, how do the revenues look compared to each other? And we can kind of decide which stocks look the best. But kind of interesting. So overall picture here on Verizon, right? They've got plenty of earnings, they're plenty big, right? I don't expect them to go bankrupt tomorrow. Beta is a little bit lower, so this, in terms of looking at building a portfolio, a lot of people, especially in the diversification camp, who are going to say, hey, diversify. They're going to say you want to try to get your overall portfolio beta to be around 1. Although you can change that and move it around in terms of just buying stock anyway. But buying a lower beta stock might be helpful if you've got stocks with higher beta, so that your average beta kind of comes into a flatter level. But regardless, hey, we're going to move less than the overall market, right? The correlation is not super strong there. PE ratio, right? We're paying about $15, $15.63 per dollar of earnings. PEG ratio a little high, right? It's saying we're overpaying for future earnings if we were to buy today. So I don't like that. Earnings per share, really good, right? Strong earnings per share, strong dividend yield. EBITDA definitely higher than these other companies, which I like, especially considering, the Ford revenues compared to the KHC revenues. It's good to see that they've got these higher earnings. So that's cool. So Verizon, I kind of like the way that it looks. Overall, I'm a little bit cautious about it with this PEG ratio, right? And of course, that is based on expected future numbers, which are, estimated based on a variety of different things, right? There's different ways to do it. But, still important to note that. So, for the sake of kind of as we've been doing, I think this is kind of the way I'm just going to do these is, as we've been going through, if it looks okay, right? I'm not seeing something that I just don't want to buy, right? I like some things about this. I like the EBITDA. I like the revenues are generally going up, right? Even if a little less consistently than Ford. I like the high dividend yield. I like I like the beta being a little bit lower in terms of trying to balance it out. If it were, if we were super worried about that, that's kind of cool. Earnings per share is pretty good. So, there's some good things going on here. So I think what I'm going to do for now is I will go in, we'll switch this back to a daily chart, and I'm going to buy one share so you guys can see what this looks like. As the idea here being, hey, we're buying an investment. Let's see if we can't do this as an example. Now, again, I don't love where it's at technically on the chart in terms of buying a lot today, but we'll buy one for the example, and then we can go from there once we get our other stocks analyzed, and we can see what we want to do going forward afterwards. So we set our limit order. It's a 1 cent bid ask spread. Drop at 1 cent, so that's cool. Good for the day. We got one. Yep, it's a limit order. That's perfect. And buy one open, it's going to cost me $41.53. It's on the right account. And there we go. Now we've got one share of Verizon in my example account here invested in. So I will mark that, right? That way I just know, hey, these are the ones that are live. That I've got a share in. So got one share, so that's pretty cool, right? We can kind of watch it and see what happens. And again, as we keep looking at these, we'll see if Verizon's one I want to keep buying or not, right? So far I kind of like the look of Ford out of these three. I just did a cursory glance, but we got three more to go. So we will look. Today's Wednesday. Friday, I'm going to be talking on here about a interesting trade of the week, right? Because I trade and I invest in this example account, hopefully to show you guys what it looks like. Kind of fun with it, but we'll be back on Friday talking about this, and then next week we will come back in with our next two, and we are looking next at Main Street Capital, right, which looks technically like it might be set for a drop, though we'll see. Then we are going to look at GM. That should be next week as well. General Motors, so we can compare, within an industry, we can compare General Motors and Ford, which should be interesting, right? Show you guys how this kind of works in terms of portfolio analysis and how you build a portfolio in sort of the, in sort of the general sense of like, this is how a portfolio manager would think through this. That should be interesting. And then the week after, we've got Home Depot, and then we can kind of analyze all of them here in a couple weeks and see what we think. So Verizon got in on one share, so kind of interesting. Hopefully this is helpful. Hopefully you guys are enjoying the series. So let me know what you want to see. Let me know if you got any questions, and we will see you guys on Friday for our interesting trade of the week, and then next week again for more investment analysis. So until then, happy trading and happy investing. We'll see you guys on Friday.